Vega neutral? It's the neutral point of Vega on the options chain. Why is it important? It's just the direction of market maker hedging of Vega. Movements in it over time. Has GME ever gone over 200% during OPEX? Yes. No, if we're actually going to have an OPEX, IV would be lower next week. It would be lower at the beginning of next week if we track historical volatility. Why is VN so high? I don't know. It's just rocketing. Someone's hedging a lot of Vega. There is no neutral point for Gamma. That's why there's no value. Ding ding. The day is done. Okay, I feel like I've explained more than enough today. So we got CPI is going to be coming in at 8:30 a.m. Like I said earlier, positioning in the market right now is at the lower end of the straddles, and the strangles are in the money, right? So the put side of the strangles are in the money, and the put side of the straddles are also in the money, just a little bit actually. This slow drift down into the bearish side of this like relatively delta neutral positioning would indicate that there's an effort to lower the price in the market and close the short side first. I would agree with that, given that long side leverage on SPX is higher than put side leverage, right? Like this is much stronger. Institutions option positioning indicates that they are more bullish right now on the outcome of tomorrow's print than they are bearish. Lots of puts closed off today at like 3,800 and 3,780 as well. I think the market's leaning into a more bullish outcome for the morning, but we'll see what happens. Obviously, they don't know, or they wouldn't be setting up delta neutral positioning either. Fubo, GME, both getting just absolutely fucking rocked today with short interest. Don't worry, that's a normal part of this period of time, and as long as our expectations remain on track for OPEX, and we're seeing borrow rates drive up, we're seeing the stock shorted, we're seeing liquidity dried up. These are all really good indicators of a potential OPEX run, and a large liquidity grab that OPEX represents. So I know it feels shitty, but we want to see this. We want to see a big hard short moving into the OPEX period. Um, Over the next few days, we may see more shorting. We may start to see IV grind down a little bit. Obviously, market performance will play a role in that, but not necessarily. And then Upstart today did very well. It performed really well. I don't know if that's due to share buybacks, it's due to puts closing that were in the money. It's probably a mixture of both, but someone didn't want the price to come up today, and we saw the borrow rate double from 15% yesterday to into the 30% range today, with very, very few shares available to borrow. And remember, cost to borrow as we see it isn't really indicative of what funds are paying their prime to borrow shares, but cost to borrow increasing does correlate with them borrowing more shares, right? And so while that number is kind of irrelevant, the interest that generates an increase in that number is very, very important, right? If they are turning to their primes to short directly, they're taking on a lot of counterparty risk, which we discussed earlier, and that counterparty risk is very dangerous. That's one of the biggest advantages to synthetic shorting, is there's no counterparty risk, right? You just have a time frame that you're locked into to cover. Whereas with when you're doing direct shorting of an equity, through a prime and borrowing shares, you're taking on a ton of risk. And so they really only take on that risk when it's necessary. And so, you know, if you look at March OPEX and we saw borrow rate climb up into like the 30-40% range, and you look at May OPEX and we saw, you know, they were unable to get the borrow rate back down, and then we saw borrow rate shift up into like the 100% range on GME, you know, that's because liquidity was too dry. They ran out of liquidity and they had to turn to the lending pools, and it takes them a really long time to de-risk those positions. So hopefully over the next 5 days or so, we'll really see more action on GME's borrow rate. But the fact that we're seeing it on Upstart now is a really good sign. And hopefully all the borrow rates for those stocks begin to increase rapidly. November 14th through 18th is OPEX. No, OPEX is on November 18th. It's the expiration for the monthly options contract. The settlement period for that expiration is T+2 from that date. So October 21st, 22nd, 23rd. There is a holiday the week of settlement. So we may see them start de-risking positions early in order to avoid continuing price action through the holiday. All right, cool. Thank you guys so much. I appreciate all of you. I will see you bright and early tomorrow morning. I'm not going to take any medication tomorrow because that shit really fucked me up today. Thanks, guys. Have a good night. I'll see you tomorrow. Bye.